Hello, this is David, and welcome to Equity Story. Just having a look at the ASX 200. This is on a weekly chart. Again, great to see we've held that 200. We bounced back up above that 40-day moving average. I think that looks really, really bullish, and we're above the 50 as well. Not really bullish, but it's not negative anymore. And as long as we're trading sort of sideways, I'm pretty confident the good companies that we're trending up will make money for us. And just looking at the short-term chart. Again, it would be good to, if we could have another good day tomorrow and just get trending above that sort of trend line, that sort of, I think it's 5,241, which is that a little bit of a level. But all in all, I think it's good, and certainly I think it's been reflected in some of the trending stocks we put on recently. Again, Altium, so what we love to do at Equity Story is just buy these great trends at the right time, and Altium certainly to me looks really, really bullish. It hit a record high of sort of back here in what was that? Back in sort of late April, about 667. And again, I think the way it's looking on that MACD, I think the way it's had a little bit of run up, it's come back and it's really bullish bounce. I think this could go on and do a little bit more for us next week, and certainly for me, this looks really, really bullish. Absolutely fantastic company and fantastic trend. As is FPH. Again, we've come in with a few trends today. Obviously, we're getting a little bit more confident with the market, and these are some of the best ones on the ASX. I mean, I'm not worried actually. We bought this. This could come back to 9 and still going up. This is a really bullish trend. I will actually put it on quite a tight leash, this one, because it is a little bit far from possibly from my liking from the long-term moving average. And we did buy this stock. I've got to be careful that I don't move too fast with these charts. We did buy this stock on a short-term trend line, and you can see it's had this nice run up. It's come down, bounced back above that 40, and for me, I don't think you can get better looking trend. I mean, I'll just squash this up for you, give you sort of an idea how good it is. This is a short-term trend, and really ever since sort of July 2000, 2 years ago. I mean, it's just been trending absolutely beautifully on this trend line, and again, looks absolutely stunning. So we're happy to add that to a trending portfolio, and hopefully, we're in profit already, but hopefully we'll make some good money in the short term. As with Burson Group, again, fantastic, strong, really strong short-term trend. It's absolutely stunning, and you can see this is generally always holding that 40-day moving average absolutely beautifully, and sort of, if it's not bouncing off the 40, it's bouncing off the 50, and if it's not bouncing off the 50, it's at the really bullish momentum, bullish times, it's holding a 20. So it looks absolutely stunning. So all those stocks are looking good, and I think we're in profit with them all. One that was sort of gave us a few shocks today. SGR, again, they can do this, these companies. It had a big fall today and came down to like 519, and then suddenly got bought back up. This is unfortunately, this is often how funds will work. Sometimes they can hammer these stocks down just to buy stock in it, and again later on in the day it just bought up, and again sort of nicely really holding that trend line. So I think you've got to be obviously a little bit careful, and you've got to watch how these stocks are trading. And if suddenly you see a stock getting sold down really quickly, really fast, it's not always people just wanting to get out. Often it's fund managers just trying to sell the stock down to get innocent mums and dads and get them to sell stock in it, and get them a little bit panicked. And if they do that, then they can obviously pick up lots of cheap stock around $5.19, $5.20, which is most probably what they did today. But again, for us, the trend looks fine. It's holding pretty nicely, and hopefully it won't be long before we do make some money out of that company. I'd just like to say very quickly, Eden Energy. We said yesterday, last few days, what a great trend it has. It's been on. I think it went up 14%, then 28%, then jumped 14%, and today it gave away 14%. But again, if you look at that sort of long-term trend looks fantastic. I do think with these 10 baggers, don't look at short-term trends with them, just stick to the long-term. They are very, very volatile, and I think for me, Eden Energy, it's absolutely a great little story. And I think the best thing to do if you own Eden Energy is most probably go to sleep, come back in a year, and I think potentially you could see this stock much, much higher than where it's trading at the moment. And you can see here from the short-term chart, even though it had a little bit of, I think just a little bit of profit taking today, it came down. Should hold these levels around 21 and then turn back up. I think it is important. I'd like to say with these sort of small like 10 bagger stocks, they are really, really volatile, and I think it's important. Equity story, I think we've proven with our record we are pretty good at picking them, and eventually if you've got the right story, and we think that if the story is right, the revenue model should kick in, and once the revenue model kicks in, then these companies should start doing really well, and you should start seeing that real strong increase in share price. Talking about small caps, CM8 had a really good announcement today, and struggled of late because I think this company has been flagging they're going to reorganize their loans at a better deal for a while now, and they haven't done it. And today they've obviously announced that they've obviously reduced the cost on all their loans, and I think this is quite bullish, and I think you could see a real re-rate now of crowd. This is a great story again, a company that's got revenues, it's growing its revenues, I think up over 200% over the last year, and there's no reason that this company isn't going to keep growing its revenues. And as the revenues increase, so should the share price. And I think another classic one of those is Bud, Buddy.com. Again, it's sort of done what a lot of sort of stocks that come on the market do. It has this big run up, and then you get the people who put the money up. They've been selling, sort of more or less holding the trend line. But what I like about Bud, they're doing 2 acquisitions now. Why are they doing these acquisitions? To lift their revenue base. And I think as soon as they start lifting their revenue base, it might take a year, Bud, a year and a half, but when she gets going and people can see the potential of this company, I think it's going to re-rate, and hopefully it's going to be re-rate to obviously a lot higher than it is now. Like I said before, you do need patience with these 10 bagger stocks, and if you do, I think obviously we've shown you can do very, very, very well from them. Saying that, as much as those 10 baggers can be good, I think our 3-year growth portfolio is one of the most standout portfolios I think I've seen for a while. Nearly all the 3-year growth portfolios are making great gains. I think I said to you last night that Adacel and Appen look very, very bullish, and looking at Adacel, it went very, very nicely through that sort of buy signal today, and it was up 4%. Appen, it still looks good, although it didn't sort of really charge for that buy signal as much as we'd have liked. Well, saying that, it did actually, it hit a record high today, 274, and then it came out, so it really did go for that buy signal. And again, VTG looking absolutely, really, really bullish. So I think a 3-year growth and BWX, if you should be, these are very different as well, the 3-year growth. They're obviously not as volatile as the 10 baggers. I think it's a lot, obviously, the reason they're not as volatile is that they've got steadier revenue streams they've had for a while. They're growing their revenue by over 20-30% a year, and as long as companies do that, they should be going up and not quite be obviously as volatile as the small caps. Anyway, I'd like to thank you for listening to Equity Story, and we've got a new 3-year growth coming out tomorrow, and obviously it's something that you don't need to rush and buy. It's going to be a lot of churning of the stock for a while, so we'll talk about that when we put the stock out. Anyway, thank you for listening to Equity Story, and I look forward to bringing you this report tomorrow night. Good night.